Welcome to TradeTheNBI.com. This is John. This report is for the 3rd. Spent most of the day at the doctor trying to figure out all the physical therapy. I can't even make a fist with this thing yet, but the market can't seem to do much anything anyway right now because the news just keeps becoming more obvious to them, and they're always late to the game anyway. They figure the Fed is going to come in and save everything, but the Fed's got lots of problems, and there are too many to count at this particular stage. We'll probably start going over a lot of the details of what the macro situation is and how it's going to deteriorate quickly, leading to some really interesting conclusions going forward. But for now, we support it on the just above the ABM green, which is tying right next here to the 76% line. We're right in between the middle of it, and we've pretty much filled the positive extremes that popped up originally. So it's exactly in line with target, but weak from a buyer standpoint. MBI magenta well below yellow, below the 25, just enough for MBI white to start creeping up. It's still not above 10, but above 5 on a daily is enough to be significantly negative. And you can see we dip below the red line on the extreme and shakeout move to a negative. So if that remains for today, then we definitely will have a negative sequence building. What a shock. NASDAQ, it's a little bit easier to see because it has done all of those things, and that becomes pretty clear from a negative standpoint, except for its extreme has not dipped below the red line. However, we wouldn't expect that 76 to hold. It becomes very easy in this particular case from a NASDAQ. Above the 76 is long, and below it is short, and definitely looks to track towards the 50% because it doesn't have anything positive in those readings to suggest that it can hold any of the supports. Treasury's finally waking up. But it's embarrassing for these supposedly expert bond traders to be so wrong for so long and so easy to call when the errors come through. And here we are continuing to get higher rates. What a shock. As TLT drops is still too high relative, and the likelihood of everyone saying the Fed was going to cut 3 times, 4 times, and all the banks corroborating that. They've all been wrong, and what a shock, they're all wrong. It's pretty obvious because anyone who can look at an oil chart or understand the situations globally can see that it's all going wrong and all going wrong quickly. You have everything from the escalations of conflict to the lack of ability of free movement of trade in key oil areas, and that supply shock is just going to be devastating to economic activity, no question about it. So anyone who doesn't think that that's coming is just an ostrich with their head in the sand. From a euro standpoint, oh, gee, how fortunate for them to be able to support above that critical 106 range. It can't last because the eurozone can't afford oil in those dollar prints, and it's woken up a market that they've tried to manipulate for forever, and really having a hard time doing it because gold is just not even close to beginning its run. It has a long way to go to the upside. Cryptos, of course, they're going to be impacted by daily market moves and that, but however, relatively speaking, minor. It's had a pretty strong upshoot. None of this is unusual for it to even out. You also have the halving coming up for Bitcoin in the next couple of weeks, and that's going to be an interesting one because you have another problem: electricity supply. Where are you going to get it from? You're using all these EVs. You have reduced the ability of actual regular power plants to be produced. You don't have enough to support EVs, AI, or any of the other stuff in the long term. And then what are you going to do? Where are you going to get the power? Well, you can take it from people, or you have to reduce the number of people that use power. Throw that one into your hat, figure out how that ends up. And then a lot of the questions you have about the reduction in food supply and all those other things seem to make a whole lot of sense. ETH, likewise, doing the same. That gets into some broader conclusions that are difficult. But from a practical standpoint, positive extreme, going all the way back to the beginning of the breakup, gee, it fills. It wasn't hard math. It's just we could see that was coming. It was a matter of waiting for the proper cells. When this one came through, it didn't quite fill it. They tried again, but no, it's got to get filled. and that's just the way of it. Still in a super negative cycle right here as far as NBI reading with the white. I mean, that's a major spike. And when you have this many people positioned in such a direction that they were confused and it kept telling you volatility was going to skyrocket here, um, you could saw it intraday, but then of course post market they start to lift that back up at the end of the day. Here we are in the current post market, filling back down into that bottom side of it. Nothing extraordinary. I don't think that it's overly dramatic. I think there's a lot of money. It's not going to know where to go at this particular stage because there aren't a lot of good things. So I think you're just going to see a huge rotation into energy sector in that, but to some avail. Yes, oil and that will do well, but if you can't move the stuff around, that becomes a problem as well. So those are other factors to weigh into that equation. But I think that the market's going to continue to have difficulty with the setup. But with inflation guaranteed to start rising, you're also going to have a muted downside to it, simply because that devaluation is never going to be accepted by the market. So keep that one in mind as you think that everything's going to hell in a handbasket. It can, and the market can still hold on for a while longer. But yeah, well, we'll get into those details another time. As always, trade well. Look for me on the Skype chat if you have any questions. I can fill them in there. Have a good one.